Good morning. Zero down SBA loans for doctors and dentists and other eligible professionals. So, if you're a doctor, you're a dentist, or a licensed professional, you're sitting on one of the most powerful and underutilized financing tools in commercial real estate. SBA loans with little to no money down. And most people assume that you're going to need 20 to 35% down to buy commercial property or your own practice location. And the answer is that's not always true. And with the right structure, whether it's an SBA 7A or an SBA 504 loan, that can allow for 100% financing for certain qualified professionals. Doctors and dentists are too. Let's break that down for you. What is a zero down SBA loan? And an SBA loan is a government-backed loan designed to help small business owners acquire real estate, equipment, and/or operating capital. And it can be all three. And for owner-occupied commercial real estate, SBA loans can require as little as 0 to 10% down. And they offer long-term fixed rates up to 25 years and allow you to own the building instead of leasing it. And for doctors, dentists, veterinarians, and licensed other medical professionals, lenders often get aggressive with terms because generally there's some high income stability, there's lower default rates, and they have strong business models. So let's talk about who qualifies. And these programs are especially powerful for doctors and physicians, as well as dentists and veterinarians and chiropractors and attorneys and CPAs and other financial professionals, but also medical practice owners. And if your business will occupy 51% or more of the property, you're in the SBA sweet spot. So how zero down actually works. And let's be clear, this is where structure matters. And you're not just walking in with nothing and getting a loan approved. That's usually not how it works. But zero down is achieved through smart deal structuring. And here's some of the tools that we could use. Seller contributions, and the seller may cover part of the equity requirement. 2 is equipment financing integration. So rolling equipment into a loan can reduce the amount of cash required, but also help you build out the location. And 3 is business valuation and goodwill. If you have a strong practice value, you can offset equity gaps. 4 is through secondary financing, whether it's a seller carry, and some lenders allow a seller's note to count towards your down payment. So let's talk about how some deals do get denied. And here's the reality, is that structure is going to beat rate every time. And even if the deal does cash flow, lenders will also look at the debt service coverage ratio, or DSCR, the liquidity and reserves, and as well the global cash flow, personal and business for the sponsors, but also their experience in their field and their practice stability or projected income. And a great deal on paper can still get declined if your expenses are understated, or if the debt ask is too aggressive, or if there's just not reserves and financial stability available. And structure doesn't mitigate risk is the key takeaway there. So let's put a real example on the table. Let's say a dentist wants to buy a $1.5 million building. And with an SBA 504 loan structure, 90 to 100% financing is achievable with a 25-year amortization. So instead of putting $300K down, you may only need minimal capital or potentially zero out of pocket, depending on the structure. And that's a massive shift in leverage. And you're using other people's money to make you money. So why this matters in a big picture scale? Well, this isn't just about buying a building. It's also about controlling your business location, having full operating control of the building and not having to ask for permission, but also building equity instead of paying rent to somebody else to pay their mortgage. And you create long-term wealth and you lock in occupancy costs at a ground zero level. And for high income professionals, this is one of the fastest way to convert income into assets. So the takeaway for the day is that most professionals think, no, I have to wait until I have more cash to make this project work. Or is there a better strategy? Well, let me point out that we can use leverage intelligently and keep your capital working elsewhere. And that's the big advantage of an SBA loan. And because in commercial real estate, the goal isn't just ownership, but is also control and scalability of the returns. So the call to action for the day is if you're a doctor, a dentist, or professional considering buying your own building, let's have a conversation and structure it the right way from the start. And you can visit my website, billrapponline.com, to figure out how to get a hold of me. There's links there to schedule a strategy call, and we can explore all of your options. Thanks for your time. Have a good day.